George Lopez and the Generation Next Realty team. Hey, good Monday morning to you. You're now on the air.
Good morning, good morning, good morning. We are so thankful that we are here this morning because it is the morning time. It's that time for us to start the morning grind, time to receive your daily dose of motivation and inspiration. We welcome you to the Empowered Lifestyle Radio Show with George Lopez and the Generation Next Realty team. Thank you for tuning in again. Let's wake up and be empowered this morning.
Good morning, everyone. Good morning, Hampton Roads. This is George Lopez, co-founder of Generation Next Realty team of Keller Williams, where we help you buy, sell, and invest in real estate. You can give us a call at any time at 757-614-1027. We specialize in commercial as well as residential real estate. Alongside me is my amazing wife, Shemay. She is the co-founder of Carrot Omnimedia, where she helps you to make your brand human. And this morning, we're going to be talking with Ms. Sandy Johnson. The topic is going to be, should we pay mortgage payment at this time of COVID-19? But before we get started with Sandy, I just want to ask everyone, how was your weekend this past weekend? Hope you guys had a great weekend. I know I did. We stayed home quietly. We did just a little bit of our business, not a whole lot. We went to check out some of our potential listings in Pewsville. We have one of our church friends who wants to, sell some property. And so he gave us a call. We went there to take a look. And we got 4 potential properties coming up on the market within the next week or so. So if you stay tuned with us, we're going to let you know.
Yes,
right,
yes. And they're exciting properties too.
Yes,
folks who are thinking about building their own home, these are land properties that are going to come on the market soon. They're in the Pewsville area, all cleared, right? So which is a good thing. So you don't have to worry about doing that. For those realtors that are out there this morning and look, you have buyers who want to build their own home. These are, you can have your own custom built home on these properties. They are coming in the market soon, and 4 of them, and they're all pretty large properties.
Pewsville is up and coming.
Yeah, it's a great neighborhood.
Really
wonderful neighborhood. And it's portions of it is in the Suffolk area and portions in Chesapeake, which is pretty interesting. So we're excited about that. Yeah. Mm-hmm.
Good morning, Sandy.
Good morning.
How are you?
I'm fine. How are you?
I'm great. How was your weekend?
Oh, it was good. It was a beautiful weekend. The weather was great.
Yes, it sure was.
Yes, we had an opportunity to take a little walk. Actually, we took a walk on Sunday and Friday. Saturday was kind of bleak, so kind of stayed in, but we got an opportunity to get out, get some fresh air in our lungs. How about you? Did you get outside?
Just a little bit. It seems like I was busy all weekend inside. I had work to do. We're trying to get our pipelines cleaned up, which means that they're getting ready so we can fill them back up again.
Oh, good. That's a good thing. We had some conversations this weekend with some of our buyers. I do the transaction coordinating, so I want to make sure that everyone is moving okay. Everything is going well. We're reaching out to the builders, and we have a few folks that are building their own home. They're in new builds or new construction, and so had conversations with them. Some of their timelines have been pushed back a little bit. So just having those conversations and how we need to go through the transaction, what we need to do. So it's a great time to make sure that you get all your ducks in a row, so to speak. This time right now, though it's not what we expected, it's an opportunity for folks to clean their pipeline, take care of the housekeeping things that we have been putting aside. It's time to go through your paper. George went through some paperwork we had, just going through some of the things he had, and was able to shred a whole lot of things that he doesn't need anymore. So and I was able to do that maybe about 2 weeks ago. So this is a good time to look at what we have and just start to take care of it. But Sandy, we're going to be talking to you this morning. And again, Sandy is with Caliber Home Loans. She's a mortgage lender, and she's been extremely instrumental in providing us every Monday with information that's pertinent to you if you're thinking about buying or investing or selling your property, because you need to know what's happening in the market even when you're selling as well. So she's been very instrumental in giving us information on a weekly basis. Today we're going to be talking about folks, we hear several people saying, oh, I don't have to pay my mortgage, or because my landlord is not paying their mortgage, I'm not going to pay my rent, or I don't need to pay my rent. So I just wanted to get it from you, because you are a lender, and just, let our folks know, because I do believe some people may not have to, if they don't have if they're struggling right now, are there things in place for them so that they can get a little reprieve from their mortgage?
Yes, I've already had several calls myself. The way that the stimulus provides a forbearance clause for people holding mortgages, they're called the mortgagors. The mortgagee is the mortgage company. The mortgage companies have and are allowing the borrowers who have lost their job or loss of income. That's the only ones they want filing for the forbearance, because forbearance means to forbear, to have patience, to push back. It doesn't mean it's a gift or a grant, because it's not. It has to be repaid. So I had 2 calls from customers that both closed in February. Both have more than the ability to pay. And they asked me about it. And I told them that this is not for people that have the ability to continue to make their payment. It's for people, designed for the folks that have lost their jobs, that have been laid off, furloughed, or have total loss of income, and for a specific period, because it's to help them. It's just like when the mortgage companies, instead of foreclosing, they will do a modification to help that customer, because no one wants a foreclosure. No mortgage company wants that. What they want to do is to try to work out a plan. They're going to work out a plan in the forbearance. So I was trying to pull up, and I think you probably are seeing what I see right now, but I'm trying to pull up our guidelines, and I just tried to send them to myself on my desktop a few minutes ago, and it never came, so I'm not sure why I didn't get those. But each mortgage company has a number to call, and if you call, you will be on what seems like an eternal hold. So they have set up an email for you to go in and have your account number handy, tell the situation, they will work with you. But remember, it's not a gift, it's not a grant. It does have to be repaid.
Okay.
When folks have their student loans that are in forbearance, like many of my customers will tell me, my loan's in forbearance until September. That means that's when they will start making their payments again. But the payments may not be the same, because they are going to get the money back. Whether you have to add a little bit more to the mortgage company, to the mortgage payment, your mortgage company, with whoever it is, they will tell you exactly how they're going to work out their forbearance plan.
Okay. So what you're saying then is that if you lost your job, or if your business lost your customers with your business, you're unable to open your business, have a financial loss,
correct,
or financial a pressure right now, or that is causing you to not be able to make your payment. So if you have a loss, then you can actually apply for you have to apply for the forbearance, and then the bank will provide you with the forbearance based on the stimulus package.
Right. And so it's not automatic. So pardon?
Do you have to qualify?
No, you don't. You have to qualify only in the aspect that you don't have employment with income coming in.
Okay.
You have no stream of income, you can't make the payment. And we want all of our small businesses, our local businesses, to be able to open and thrive again. So they got this set up along with the small, the government, with the Small Business Administration extending loans to our local businesses. small businesses to help them get back opened up again. And hopefully we'll be out of this problem very quickly.
Right, right. We're all hoping that. So if you did not lose your job and you are still going to work or your business is still thriving, then you should make your mortgage payment, which it will also relieve a burden on the financial institutions as well, because if everyone is not paying their mortgage, then that becomes a major problem, right?
It's a major problem because if an enormous amount of people quit making their mortgage payments, the mortgage industry will fail. And that's what we don't want to happen, because the mortgage companies, it's not like they have this money that's all of their money. Like my company is self-funding, but that doesn't mean that we have an inner stream of money. So they do have to collect mortgage payments in order to meet their obligations. We do have a nice safety net at Caliber, but and we want to help everyone that we can, because we are all in this together. Everyone seems to be pulling together, regardless of what industry you're in right now. We all have to stick together because we are all equally a part of the human race. That is the race that we're in, the human race.
Amen.
Now, Sandy,
Amen.
For the people who lost their jobs or who lost customers and they can't make any payments right now, let's say August or September, things change and they get their customers back, their business up and running. Are they going to continue where that payment was, or is there going to be an increase in mortgage payment?
That's what I'm saying. Each mortgage company is going to handle it differently. So I don't know if they're going to add a few dollars more to the mortgage payment. I don't know if they're going to somehow modify it and add it to the back of the loan. I have a customer right now that loan was modified a few years ago because they had filed a bankruptcy. They excluded their home, but the mortgage company modified it. So when I looked at her payoff, because she was thinking of refinancing, she has $31,000 in what's called deferred principal. So when I looked at the further into it, she doesn't have to pay that back until the end of the mortgage, which is like 2056 for her. So they may do something like that. Okay. So they may modify it to a different rate so that the customers can have a much more manageable payment. So there's different things that they will do, but it will be a total effort to help every person that has a mortgage.
Okay. Well, we just have a question from one of our Facebook watchers, and it says, I'm thinking about refinancing and add 2 of my kids on title. If one of those kids decide to buy on their own in the future, will she qualify as a first-time buyer?
If they're on the title, if they put them on the loan, they will not, because they don't have an interest. They always have an interest in the property, but they're part of the mortgage at that point. So if the mother retains the ownership, the primary residence rather, and the children are not, the Virginia Housing, VHDA, who treats if you've never bought a home, they're the ones that treat you as a first-time buyer and gives you the opportunity to obtain the grant if qualified. In some cases, they have allowed folks to qualify as first-time buyers again. That's going to have to be looked at as an individual situation. But I would say if that child, the adult child, I'm assuming, is thinking of purchasing, I don't know that they need to come onto the mortgage and be part of the mortgage. When a customer wants to refinance, they're either going to be like a VA interest rate reduction, an FHA will call it a streamline, and the conventional is the total refinance. The FHA and the VA, you're not going to add any more obligors to the loan that weren't there to begin with.
Yes.
So
you're talking about title, not to the loan, but to the title.
If they're just being added to the title, then they may not. They may be treated as a first-time buyer. The parent that's asking the question, what she could do is just, amend her will so that the properties go to the children.
Say that. I was just
So you
going to
can,
say
so
that.
instead of going through adding the children onto the title, the best thing to do is to make sure you have a will. And we will have actually, we're hoping that we'll have Kristen Pettiford on our line, who actually on the show this week or sometime next week, just to talk about that.
Yes.
She is an attorney and she's also a financial advisor. So, you can go ahead and just amend the will to make sure that the home is included in that. But what are some of the reasons why someone would want to add their children to the title?
Well, and that's a good question for Kristen Pettiford, but I think that it might be because they want to avoid the probate. And I was just thinking about that. If they already own title, they already own it. The best way, if the lady adds them, she should add each one of them with the right of survivorship, I think, or else it's going to go down the chain of title for each one. So instead of taking it as tenants in common, she might want to take it with the title where the property, if well, let me see that. Let me think about that for a minute, because if she's only adding one, then she might want to give them take title by not by the entirety. That's the husband and wife, but take it where if one dies, the ownership flows to the other one. But the reason I'm hesitating is because she may have more than one child.
So it says 2 children. It's 2.
Right.
Children.
So if she did it for 2 children, then they would have the 100% of the ownership when she passes away. So they would each have and all 3 of them at this point, if she added them, would have 100% undivided ownership. But then, if she wanted to sell it, then she has to make sure that everyone is in agreement.
Okay.
If she adds them both like that. So that is a good question for an attorney, and they probably should talk to someone like Kristen just to make sure that what they're asking is going to protect their children, if that's what they're trying to do. And that sounds like that might be what they're trying to do.
And that's actually, we have title companies that we work with, so we're going to try to get them on the show as well, so that we can actually get a little bit more clarification. I thank you so much for that question. The person wanted to know, is this a federal law that applies in California as well? So I think it actually should go to a real estate attorney who may be able to answer it better.
Yes, I think so too, hon.
No, go ahead, Sandy, go ahead.
I was going to say, if the lady, when she talks to an attorney, she might want to ask them about creating a family trust too. That, it is above my pay grade, but I know that families do that, and that is a good way to keep the house from being tied up when the parent dies.
Yes.
Now, Sandy, let's say Petty Officer Smith was deployed overseas, and 1, he wanted to refinance, and 2, he wanted to purchase a home. And his wife was back here in the Hampton Roads area. Would a power of attorney work for those transactions?
On the refinance, it will work. He has to, but she needs to currently be on the loan with him. Then she actually wouldn't need she would need a power of attorney to sign for him. They have to do what's called an alive and well the day of closing, because they still have to make sure that he's still alive and in the same, nothing's wrong with him physically where that would impair him from making that decision. So if he were to buy, the VA requires that the veteran be able to occupy within 60 days of closing. When the husband is deployed, they may be able to close. Again, that's a good question for me to look up, because I've had that situation many years in the past, and the customer was able to close, but I've had another situation where they did not allow them to close. So that is something I can check into for you.
Okay. Well, thank you so much. So another question is what if the husband or wife is deployed and the one of the spouses deployed and the other one lost their job, and so they're having a difficult time with the mortgage right now. One is working, whether the person's deployed or not. One spouse is working, but the other is not. Would that family qualify for a loss of income?
It seems to me, my opinion is they will. They need to contact their company because, see, they've lost a significant portion of their income, which may prevent them, and it sounds like that's going to prevent them from making their mortgage payment. We want people to be able to feed their families first. So they need to go ahead and contact their mortgage company and just get the criteria. And they will look at their income and their debt situation, and they will qualify that situation based off what they can see. So they sounds like they would absolutely be able to defer and forbear their mortgage payment.
Okay, even if the other spouse is not on the loan. Question.
Yes, if the other spouse is not on the loan and they've lost their income, they can't make the payment because they qualified by themselves when they bought the loan if the other spouse is not on the mortgage. So they would absolutely qualify.
So if somebody wanted to get a hold of you, Sandy, what's your contact information?
My phone number is 757-287-1670. My email is Sandy, sandy.johnson@caliberhomeloans.com. They can call me or text me or email me, and I will get right back to them if I'm not able to answer.
Okay. Here's Sandy's contact information for those watching on Facebook.
757-287-1670. Sandy, I remember that number. It's I know it by heart.
He knows numbers very well. Don't ask me. I don't know. I ask him every time, what's Sandy's number again? You know, we thank you so much for being on the show this morning and providing this information. So the next thing we want to talk about is, as we're going into the season for where real estate usually gets really hot, and that's usually right now going into the summertime. What would you tell people who are thinking about buying right now and people who are thinking about selling right now? What would you tell them they need to do to prepare for this new season?
Well, if they have not lost their job and their source of income, then, and if they do have some issues, they need to start working with their lender to be pre-approved right now. They can be locked in. Our company has something called a lock and shop. They could shop for their mortgage for 30 days, for a home rather, which will include a mortgage. And that'll give them the opportunity to lock in a low rate. And then when they find a home within 30 days, they have up to 45 days to close. So that gives them a 75-day lock. Mm-hmm. Currently, that would put us into to June. So I think that's going to put us to the mid-June right now. Mm-hmm. But if they have any issues, work on those now. Mm-hmm. And try to get your financial house in order. Determine where you want to live. I mean, start deciding on the area, what your needs are, and then your wants. As we've talked many times, figure out your needs first, and then your wants secondary.
Yes.
So that you can make a good informed decision. Mm-hmm. But go ahead and talk to a lender. They want to talk to me, again, they can reach me at 757-287-1670. I'll be glad to help them and tell them, what they need to do. If there are issues involved, we do have a source to help them. Serena Mann with the Credit Doctor of Virginia can help them with any issues that I'm not able to help them with.
Yes. And Serena is always available. She is really great at the Credit Doctor. helping folks who are having issues with their credit. And we actually have several people working with her right now. And she does a phenomenal job. So, definitely reach out to her as well. And you can always reach out to us. We can be reached at 757-614-1027. It's the first step in the process. Well, the first step in the process, let us know you're thinking about purchasing a home. And again, 757-614-1027. And we'll make sure that you are going through the process properly.
Absolutely. And now, Sandy, let's say somebody was at a 4% interest. And what would be a comfortable refinancing rate for them? Because, someone might say, you know what, I'm at a 4%. The rate has dropped to 3.5. Would you recommend for somebody to refinance at 3.5 if they're at a 4%?
No, not unless they're trying to get cash out, George, because it will not save them enough money.
Okay.
It has to be a definite benefit to the borrower. They're not going to save at least 1 percentage point or a little more than $100 a month. It's not worth it.
Right. So comfortably, what would be a good rate for them to go to in order for them to?
If they're at 4%, 3%, 3% or less, if they're able to get it. Currently, most mortgage companies have put a moratorium on their refinances. They want to get their pipelines cleaned out. My company is getting ready to open. We had a few days moratorium. We're getting ready to open back up to refinances, but we're not there yet. We may be this afternoon. But the purchases, through the weekend, someone had at least a 650 credit score, and they qualified otherwise with their ratios and their loan amount. We had rates down as low as 2.75. You see, that's not something that you on a purchase. You can't just say that across the board because there's so many variables that we have to look at first to see if that they could in fact get that. But that's available. I want to make sure that I'm not saying more than I should, because you have to disclose APR and everything else when you start talking rates. So maybe I should not say that, but they are good right now. And if someone's interested, give me a call and let me just go through their individual situation and see if I can help them.
Right.
Now,
right.
is there any attractive adjustable rate mortgage out there right now?
Pardon?
ARM, is there an attractive ARM right now?
FHA, VA, I'm not sure because I looked at one Friday on a conventional and the rate was slightly higher than the 30-year. Historically, that's been a little lower. Right now, it seems that they're not. So they may be, and I think they are on the FHA and the VA, but I'd have to look and see what comes in because, George, we had like 6 rate sheets on Thursday. We had 4 on Friday. I mean, things are changing every hour or two. Fannie and Freddie are changing their guidelines. That's Fannie Mae and Freddie Mac. And we have to check everything. When the customer calls, we're looking at current information.
Right.
So it's constantly changing. So I apologize. I hate to be so vague, but until things start settling down a little bit, I have to look at each individual situation.
Right, and that's why it's important for folks to call you. And someone just asked for us to post a number on Facebook, so I did.
Thank you.
Your phone number is 757-287-1670. Again, that's 757-287-1670. And Sandy, you can do a loan anywhere in the United States.
Yes, we can assist the customer anywhere.
Not every lender can do that.
Right.
Yeah.
Sandy, we're so grateful to you. You've been a part of the Generation Next Realty team for quite a while.
Yeah.
You were an agent at one point, so you're very knowledgeable about this.
Yes.
Not just in real estate, but also in mortgage lending. And
Yes.
so we recommend you strongly. You're very personable. You're loving. You're a Christian woman. And you're just so kind. You're so kind.
Yes.
Yeah, I try to be.
As a real estate team, you know, we work with, we always allow our buyers to make that decision themselves. So they're, you know,
Yes.
come to us and you have your own lender, that's fine too. We have Sandy on our show because we know she is knowledgeable, has been in the business for a very long time. But, you know, full disclosure, we make sure that when we're working with our buyers, that our buyers are the ones making that decision.
Yes.
We have you on the show so people can know how knowledgeable you are.
Thank you. Yes, we want everybody to take their loan, you know, to obtain their loan anywhere, but they should shop around.
Absolutely.
And because, you know, you want the person, the borrower, to feel like they have absolutely checked everything out, and then they're making a good informed decision.
Absolutely. Yes. So we had a situation recently where we actually do have the new home buyer workshops, right? So we've been doing these workshops for almost 2 years, and we're going to be doing the next one on Zoom.
Yes.
Are you excited about that?
Yes, it's like the new way to meet people.
Right. So that, and you know, we have some folks who have wanted to come to the new home buyer workshop, but because they work on weekends, or one of the spouse works and the other one has to be home with children and so forth. So we do have some folks like that. That say, well, you know, if you ever have it online, let us know. So we're looking forward to this new home buyer workshop that we're going to have. We're hoping to have it at the end of the month. We'll have an actual date for everyone, and it's a great opportunity. And then it also allows people to tune in from anywhere, wherever you are in the world. You can tune
Yes.
to the new home buyer workshop, get the information. Knowledge is power, but my husband says applied knowledge is even more powerful. So it's good to have the information, and then of course you get to apply it in your life. And sometimes, you know, you may have purchased a home already, but things change, laws change, and you may not have been involved in the process when you purchase your home. So we have that very often, where folks come to the new home buyer workshop and they're like, oh my God, I didn't even know this. If I knew this before I bought my house, I would have been in a better situation. Or they felt outside of the transaction when they purchased because they didn't know what they needed to know. So, which is one of the reasons why we do the new home buyer workshop. It's about educating you. And so, as I started this by saying, we've been doing these for almost 2 years, and we have a person who attended the workshop maybe about 7 months ago, 7 to 8 months ago, and he contacted
For the past
recently.
30 minutes, you have been listening to the radio broadcast of the Empowered Lifestyle Radio Show with Mr. Lopez and the Generation
coming off the air now.
Sure, stay tuned once again on at 8:50 a.m. hour right here on WGPL Portsmouth Norfolk and WPCE Portsmouth Norfolk. 3 minutes now past the hour of 9 o'clock a.m. I'm the brother Donald L. Eason. Good morning.
Good. So that's a good thing for us. Let me make sure that the okay. So we are back. So as we were saying, he came to the workshop 7 months ago and reached out and said, my credit has improved and he would like to start the home buying process. Can you share a bit with us about how that, you know, after 7 months, his credit is better, but it's still not where it needs to be, right?
Right. When the bar says that it may not be where it needs to be, I still need to take a look at it, or their lender needs to take a look at the credit to see exactly what can be done to help them. In a lot of cases, you know, the revolving debt is either the best way to increase your score, or it is the worst way to decrease your score, depending on the utilization of it, the balance compared to the high credit. So there are a lot of things several things we can tell them to do so that they can get that credit score increased, fairly quickly in the next 60 to 90 days in most cases. But it's an individual situation again. We just have to talk to the customer and take a look at their credit and their qualifications. There's no obligation. It's always, everyone has the opportunity to call, to investigate, to see exactly where they are and where they want to be. And as you and George and I know, that in most cases, the borrower or the potential borrower can go out and purchase a home and have a lower monthly payment than what they currently pay for rent.
Right. And so when a person goes to you and they say, listen, I want to buy a house now. I think my credit is good. I've been on Credit Karma or Experian and whatever tool that they've been using to check their credit themselves. And they think based on that tool, it's at a 640 or a 630 or a 680. But then when you check it, it might be at a different rate, right? So it's important for folks to recognize that the numbers may change. That credit score may change when a lender looks at the credit. Why is that?
That is because when they pull their credit and they're checking behind, following along Credit Karma or some other site, they are seeing a retail report. So when we check it, it's called a mortgage report, where we check all three repositories. If they have a lower credit score on Credit Karma, they probably will have a lower credit score when we pull the mortgage report, but not always. I've seen it recently where a customer thought that his score would be lower, and it was actually much higher when I pulled the mortgage report.
Mm-hmm. Okay. So when a person says, I don't want you to pull my credit because I don't want my score to go down, what do you do? Like, how can you even give them advice if you don't know what the score is?
Well, you can't. Just like I looked at a customer's credit on Saturday, but it was what he sent to me, and it was a retail report. And so that doesn't give me a very good picture to help them. But, he seemed to know what he needed to do after he and I talked a few minutes. And based on what he said and what it told me his balances were, then, and how, and the length of time he'd had the credit card, then I knew that he'd be able to probably have a much better score in 60 days. But that's not a given, but that is a good indication.
Okay. And of course, things will change significantly within the next 60 days because we don't know from day to day right now, right?
Everything. I know everything can change, and it is changing. Guidelines are changing. A lot of the appraisals now, especially on the conventional, they're just doing, we